Hello students. Today's session let us work out one more problem under dissolution of partnership firm with new adjustment. So let us go to the problem now. I will read out the problem. Anand, Chandu and Vijay are partners sharing profit and losses in the ratio of 2:2:1. Their balance sheet as on 31/3/2018 was as follows. Balance sheet is given and balance sheet there are assets as well as liabilities. Asset side it is given cash in hand 21,000, debtors 25,000, bills receivable 5,000, investment 18,000, machinery 25,000, furniture 16,000. And under liabilities side, creditors 15,000, Anand's loan 5,000, bills payable 10,000, bank loan 8,000, profit and loss account 22,000, and capitals of Anand 20,000, Chandu 20,000, Vijay 10,000. And the total of the balance sheet is 1,10,000. Below the balance sheet, they have given, on the above date, the firm dissolved. The following information is available. First one is assets realized, debtors 24,000, bills receivable 4,000, investment 15,000, machinery 22,000. Second, Chandu took the furniture for rupees 10,000. Third, creditors and bills payable are paid at a discount of 5%. Next one is unrecorded investment realized rupees 4,000, dissolution expenses rupees 2,250. Prepare realization account, partners capital account and cash account. Now, in this problem, we can see there are three partners, Anand, Chandu and Vijay. And they will share the profit and loss in the ratio of 2:2:1. And we need to prepare three accounts here. One is realization account, partners capital account and third one is cash account. Now when you are preparing realization account, first account we have to prepare realization account. When you are preparing realization account, we need to follow 7 steps. We need to follow 7 steps. So first let us prepare the format of realization account. So format of realization account. So realization account consists of two sides, debit side and credit side. Debit side and credit side. And both the side you have to prepare one rupees column and one amount column. One particulars column and one rupees column. Both the side you need to prepare one particulars column and one amount column in rupees. Now let us record the transactions one by one. So as I told, when you are preparing realization account, we need to follow 7 steps. So first step is what? In the balance sheet you can see assets as well as liability. Now from the balance sheet you need to record all the realizable assets. Realizable assets are those assets which can be converted into cash. Those assets we need to record under debit side. Asset shows a debit balance. And all the external or outsiders liability we need to record under credit side. So as you have to see how many assets are there in order to sell those assets, realizable assets, and how many external or outsider liabilities are there in order to pay those liabilities. So whatever money you will receive from by selling the assets, that money you need to utilize for paying the outsider liability. First you need to pay to the outsider. Then if any money remains, then that you have to distribute among the partners according to their profit and loss sharing ratio. So first step is transfer all the realizable assets to the debit side. Go to the asset side. You have cash in hand 21,000. Cash is already there in the realized form. So no need of transferring to realization account. Second one is debtors 25,000. So debtors we have to transfer to the realization account. Next one is bills receivable 5,000. Again bills receivable is also we can transfer to the realization account. investment also we have to transfer, machinery also we have to transfer, furniture also we have to transfer. Here except cash in and bank, all the other assets we need to transfer to realization account in order to realize them. Cash is already in the form of realization, so no transferring the cash here. Other than cash, all other assets like first one is debtors, transfer to debit side. 2 debtors 25,000. Next one is bills receivable. 2 bills receivable 5,000. Next investment. 2 investment 18,000. Next machinery. 2 machinery 25,000. Next 2 furniture 16,000. So how many assets are there? 5. Debtors, bills receivable, investment, machinery and furniture. These assets you have to realize. Now let us see which are the external or outsiders liability. Go to the liability side. Creditors. So creditor is a external liability. Firm has to pay. Anand's loan. Whether Anand is a partner here? Yes. Anand is one of the partners. So Anand loan is a partner's loan. If any amount is advanced by the partner is called as partner's loan, and those amount we need to settle in the cash account by paying the cash to that particular partner. So no transferring the partner's loan to the realization account. Outsiders loan we can transfer, only partner's loan we need to settle by paying the cash to that particular partner. So that you have to record under cash account, not under realization account. If any other loans are there, outsiders loan like your bank loan, other any outsiders if he has given loan, then we need to transfer because its amount belongs to the outsider and we need to pay. So now Anand's loan is not transferring to realization account, directly you have to record under cash account. Next one is bills payable. Bills payable also we need to pay. So we have to transfer to the realization account. Next one is bank loan. Bank loan is outsiders money. So bank's money. Bank is an outsider. So bank is outsider. So we need to pay the money. So we have to transfer to realization account. Profit and loss. This is undistributed amount. If it is given under liability side, then it is a undistributed profit. So what you have to do? Because it is a undistributed profit, we need to transfer to partners capital account because we need to distribute among the partners according to their profit and loss sharing ratio. And last one is capitals. Capital also belong to the partners, so we have to record under partners capital. Whatever amounts or information belong to the partners, that we have to record under partners capital account. Now here in the liability side, which are the liabilities we have to transfer? One is creditors, one is bills payable, one is bank loan. Through 3 liabilities we have to transfer to realization account. Which side? Credit side. Liability shows credit balance 15,000 by bills payable 10,000 and by bank loan 8,000, by bank loan 8,000. So 3 external liabilities are there. So how many assets can be realized? 5. And how many liabilities firm has to pay? 3. Now what you have to do? Once you list out all the realizable assets as well as the external liability, first you have to settle all the assets by selling those assets. Then whatever money you will get, that you need to utilize that money for paying the external liability. So let us go to the problem and find out what are the adjustment is given for assets. So below the balance sheet we can find out, on the above date the firm dissolved, the following information is available. Assets realized, debtors 24,000, bills receivable 4,000, investment 15,000, machinery 20,000, 22,000. So assets realized. So when you are realizing means you are selling the asset. That time firm will receive money. So it is an income for the partnership firm. So assets realized is an income. So we need to record under credit side of realization account. Credit side of realization. Entry will be cash account debited to realization account. So realization account is credited by cash account. Credited by cash account. By cash account. Assets realized. Assets realized. Now which and all assets realized is given one by one. Debtors. Debtors 24,000. Next one is bills receivable is given. Bills receivable 4,000. Then investment 15,000. Then machinery 22,000. So 4 assets are realized here. Machinery 22,000. 4 assets 22,000. Now you can see here how many assets you have transferred, 5. Out of that how many are sold or realized? 4. So which one is left out? Which one is left out? Furniture is left out. Let us go to the other adjustment and find out any information is given about furniture. So adjustment by B, Chandu took the furniture for rupees 10,000. Chandu took the furniture for rupees 10,000 means furniture is taken over. There is a adjustment. There is an adjustment for furniture. So that is taken over. Taken over, assets taken over, you need to record separately because it is taken over by the partner. So we cannot record under cash account. You have to write the name of the partner, which partner has taken over the assets. That partner's name you have to write and you have to record separately. Other than that, go to the other adjustment and see any other information is there for assets. Third adjustment is creditors and bills payable are paid at a discount of 5%. That is nothing but liabilities information that we don't require now. Next one, adjustment D. Unrecorded investment realized rupees 4,000. Now, unrecorded investment means what? Investment which is not recorded in the books is called as unrecorded investment. Means balance sheet it is not recorded. But now it is given unrecorded investment realized 4,000. We have to realize those unrecorded investment of 4,000. Realized means which one is that? Assets realized. So under that only you have to record. So these are the recorded assets are realized. Now separately they have given unrecorded investment is realized. So whether it is recorded or unrecorded, if any asset is realized, then we need to record together under one entry only, that is by cash account. So at the end you record the unrecorded investment. Unrecorded investment. So all the assets realized, whether it is recorded or whether it is unrecorded asset, we need to write together. So how much is the unrecorded investment? 4,000. Unrecorded investment realized is how much? 4,000. Now all the assets are realized. We need to total the assets. 24,000 plus 4,000 plus 15,000 plus 22,000 plus 4,000. So what is the total of assets realized? 69,000. 69,000. So total assets realized how much? 69,000. Now which asset is left out? Furniture. What adjustment is there for furniture? Chandu took the furniture for rupees 10,000. Furniture is taken over by Chandu. So again which side you have to record? Credit side by Chandu's capital account. So Chandu has taken over the furniture and how much amount is giving to the firm? 10,000. 10,000 rupees. So for the firm it is an income. Furniture taken over. Furniture taken over. furniture taken over 10,000. So 5 assets were there, all 5 were settled. 4 are realized, one is taken over. So assets are settled, assets accounts are closed. Now what about liabilities? How many liabilities we have? External liability 3. Let us go to the adjustment and find out what information is provided about liabilities. Adjustment number C, they have given creditors and bills payable are paid at a discount of 5%. So creditors and bills payable are paid. So external liabilities we need to pay to the outsiders. They have given creditors and bills payable are paid at discount of 5%. Then no other information is given about liabilities. Only they have told creditors and bills payable are paid at a discount of 5%. But when you look at here, when you look at the liabilities, external liabilities, how many are there? 3 are there. But there is no information regarding bank loan. For bank loan, any information is not given. So bank loan, there is no information is given in the problem. Now in case for the liabilities, that is external liabilities, if any adjustment is not given, like it is paid or if it is not, if it is taken over, any information is not given in the problem, then you have to pay the liabilities, external liabilities. If adjustment is not given also, whether it is paid or no, then you have to pay the external liabilities. You need to pay the money to the outsiders. So 2 liabilities are paid at discount. Liabilities paid is an expense for the business. Expense means debit side. And how will pay the? I will pay it by paying the cash to cash account. To cash account. Entry will be what? Realization account. Liability is paid. Journal entry will be realization account debited to cash account. Realization account debited to cash account. Liability is paid. So information is given only for 2 things, 2 liabilities, creditors and bills payable. It is paid at discount of 5%. What is the book value of creditors? 15,000. So what? How much is the discount? 5%. 5 by 100. So 750. So 15,000 minus 750. How much will get? 14,250. Creditors are paid how much? 14,250. Then bills payable also paid at a discount of 5%. How much is the bills payable amount? Bills payable. Bills payable amount is how much? 10,000. Again 5% is the discount. 5 by 100. 500 it is. So 10,000 minus 500. How much will get? 9,500. 9,500. Now which one is left out? Bank loan. In the adjustment, any information is not provided. So there is no information for bank loan. Whether it is paid or whether it is taken or both are not given. In that case, if any liabilities adjustment is not given, then we need to pay those liabilities. Which liabilities? External liabilities. When you are listing out, we have listed out 3 external liabilities, but in there only 2 liabilities information is provided. Bank loan there is no information, but still because it is outsider money, firm has to pay. Before closing the business, firm has to pay the external liability amount. How much is the bank loan? Which value of trade? Same value which is given in the balance sheet. How much is the bank loan amount? 8,000. 8,000. Now total the liabilities. Total how much will get? Liabilities paid is how much? 31,750. Liabilities paid is how much? 31,750. 31,750. Now at the end what you have to record? Now assets are settled, liabilities are also settled. You can see when you are transferring the asset, which side you are transferred? Debit side. Adjustment of the asset will go to credit side, that is assets realized and assets taken over. Opposite of liabilities. Liabilities you are transferred credit side, but adjustment of liabilities you have to record under debit side. So you need to record opposite side, assets as well as liabilities. Now finally, for carrying out the dissolution of the business, that is for selling the assets and paying the liabilities, firm needs to incur certain expenses called as dissolution expenses. It is also called as realization expenses. Sometimes it will be also called as cost of dissolution. Now in this problem, they have given dissolution expenses rupees 2,250. Dissolution expenses rupees 2,250. So expenses means which side? Debit side. What is the journal entry? Dissolution expenses paid. Realization account debited to cash account. To cash account. Realization expense debited to cash account. Dissolution expenses 2,250. 2,250. Dissolution expenses 2,250. Now we have recorded all the information. We need to total and balance the realization account. We have to see which side is more, whether debit side total is more or whether the credit side total is more. So when you total, you will get credit side total is more. So 25,000 plus 5,000 plus 18,000, 25,000 plus 16,000, 31,750, 2,250. You will get debit side total more, not credit side, debit side total more. When you total both the sides, debit and credit side, you will get which side total more? Debit side total more. And total of debit side is 1,23,000. 1,23,000. Now remember, if debit side is total is more, then balance amount you have to record under which side? Credit side, opposite side, in order to make it equal. So leave credit side 4 to 5 lines, then write the total. Then write the total. So how much is the total of debit side? 1,23,000. 1,23,000. 1,23,000. Same total right under debit side also. 1,23,000. 1,23,000. Now what you have to do? From this 1,23,000, we have to minus all the credit side amount and find out the balance. So after minusing 1,23,000 minus 10,000 minus 69,000 minus 8,000 minus 10,000 minus 15,000, how much amount will get? 11,000. How much will get? 11,000. Now what you have to do? That 11,000 rupees we have to distribute among whom? Partners. By partners capital account. We have transferred to partners capital account. By partners capital account. Now here which side is more, students? Here debit side is more than the credit side, means expenses are more than the income. So this amount 11,000 is what? Loss. 11,000 is what? And that loss of 11,000 you have to distribute among whom? Partners, according to their profit and loss sharing ratio. Whether the realized account shows a profit or whether it is a loss, we need to distribute among the partners according to their profit and loss sharing ratio. Now who are the partners here? 3 partners. Who and all? Anand, Chandu and Vijay. So write the name of the partners: Anand, Chandu, Vijay. Anand, Chandu, Vijay. Total balance how much you got? 11,000. 11,000. What is their profit and loss sharing ratio? 2:1. So 2 plus 2 plus 1. Total share is 5. How much Anand is getting? 2 out of 5. How much Chandu is getting? 2 out of 5. And how much Vijay is getting? 1 out of 5. So now distribute Anand 11,000 into 2 by 5. So how much it is? 4,400. And Chandu 11,000 into 2 by 5, same 4,400. And last one is Vijay, 11,000 into 1 by 5. How much will get? 2,200. 2,200. So it is loss. Loss on realization. Loss on realization. That is, total loss is 11,000 and it is distributed among the partners according to their profit and loss sharing ratio. So now we have completed with realization account. Now we have to continue with the other two accounts. One is after realization, next one is partners capital account. Let us prepare the format partners capital account. Now tell me how many partners are there here? 3 partners. Partners capital account. So 3 partners, Anand, Chandu and Vijay. So you need to prepare 3 amount columns. We need to prepare 3 amount columns. Debit side and credit side. Both the side one particulars column and 3 amount column for 3 partners. Anand rupees, Chandu rupees and Vijay. Again credit side particulars, Anand, Chandu and Vijay. Anand, Chandu and Vijay. Now when you are preparing partners capital account, first step is what? You have to record their opening balance, that is capital balance, opening capital balance. Now go to balance sheet. Liability side you can find capitals. Anand 20,000, Chandu 20,000 and Vijay 10,000. So capital shows which balance? Credit balance. So you have to record under credit side. By balance brought down, opening balance. How much it is? 20,000 for Anand, 20,000 for Chandu and 10,000 for Vijay. So that is the opening balance, that is capital amounts of the partners. After that you already prepare realization account, and realization account shows what? Loss on realization, and this loss amount you have distributed among the partners. This loss now we have to record under where? Partners capital account. You have transferred to partners capital account. In the realization account, which side you have recorded? The amount credit side, that is total 11,000 and you have distributed 4,400 for Anand, 4,400 for Chandu and 2,200 for Vijay. Credit side is there. Now when you are transferring to partners capital, which side it will go? Debit side, opposite side. So entry is what? Partners capital account is see, if it is a loss, what is the entry? Partners capital account debited to realization account. So partners capital account debited to realization account. Otherwise simple, in the realization account you are recorded under credit side. Now when you are transferring to partners capital, it will go to the opposite side, that is debit side. Entry is what? Partners cap for loss. Realization loss. Journal entries partners capital account debited to realization account. So how much is each partner share? 4,400, 4,400 and 2,200. 2,200. So that is the second step. First step to record the partners capital balance. Second step is to record the realization account profit or loss. Now third step, from the balance sheet, if any reserve is there or undistributed profit or loss is there, that also you have to distribute among the partners. Let go to the balance sheet and find out, is there any reserve or profit and loss account. So there is no reserve in the problem, but there is a profit and loss account. Profit and loss account is given under which side? Liabilities side. How much is given? 22,000. Profit and loss account, how much is given? 22,000. What you have to do? Profit and loss account, we need to distribute among the partners according to their profit and loss sharing ratio. So liability side means what is that? Undistributed profit. Profit and loss account if it is given under liability side means what it is? It is an undistributed profit amount. So now we have to distribute among the partners. So which side it will go? Liability side means credit side by profit and loss account. Total how much is given? 22,000 into 2:1. First partner 22,000 into 2 by 5, 8,800. Second partner also 22,000 into 2 by 5, 8,800. And last partner 22,000 into 1 by 5, 4,400. 2 plus 2 plus 1 means total share is 5. So you have to divide it by 5 you have to do. So first partner is 2 by 5, that is 22,000 into 2 by 5 is equal to 8,800. Second partner 22,000 into 2 by 5 is equal to 8,800. And third partner 22,000 into 1 by 5 is equal to 4,400. Now after recording this 4 information, first you need to record this 4 information. First opening capital balance, then realization account profit or loss, then any reserve or reserve fund is there means if it is given then you have to distribute among the partners. Then profit and loss account from the balance sheet, that is undistributed profit or loss. If it is given under liability side means it is a profit, so you need to transfer to credit side. In case profit and loss account is given under debit side, then it is a loss, then you transfer to debit side of partners capital account. After that from the realization account, if any partners information is there, that you have to record. Assets taken over or liabilities taken over. So liabilities, no liabilities are taken over here. Assets taken over is there, yes. Furniture is taken over by Chandu at rupees 10,000. Furniture is taken over by Chandu rupees 10,000. So what is the journal entry for assets taken over? Partners capital account debited to realization account. Partners capital account debited to realization account. So which side it will go? Debit side. Partners capital account debited to realization account. Which partner has taken over? Chandu. So how much it is? 10,000. How much it is? 10,000. Otherwise, just look at the board here. Realization account. Chandu's name. Which side you are recorded? Credit side. Because it is relating to partner, we need to transfer it to partner's capital account. So when you are transferring from credit side to which side it will go? Debit side, opposite side. So debit side you write to realization account 10,000. You can write furniture taken over. Only one partner, no? So you can mention the name. Furniture taken over. Furniture taken over. So any other partner's name is there? No. So now your partner's capital account is also done. We need to total and balance. And we have to settle the partner's capital account. How we have to settle the partner's capital account? If partner's capital account shows a credit balance, then firm has to give money to the partners. If in case partner's capital account shows a debit balance, then it is a minus balance, deficit balance. That means partner has to give money to the firm. So now let us see which side is more, whether a partner's capital account shows a credit balance or debit balance. Now for the first partner Anand, only 4,400 is there in the debit side. But in the credit side how much is there? 20,000 plus 8,800. So which side is more? Which side is more? Credit side is more. So Anand's account shows a credit balance 28,800 means surplus balance, plus balance 28,800. Right under debit side also minus 4,400. How much is the balance? 24,400. Balance is how much? 24,400. Means Anand will receive how much now? How much amount from the firm? 24,400, because his account shows a credit balance. Credit side is more. So means it is a surplus balance. That means partner has to receive money. So Anand will receive how much? 24,400. Then Take the second partner, Chandu. Here 4,400 plus 10,000, 10,000, 14,400. Here 20 plus 8, 28,800. So which side is more? Credit side is more. So 28,800. Same total right under credit side, 28,800. Minus 10,000 minus 4,400. So how much is the balance? 14,400. Again, Chandu's account also shows a credit balance. Means credit side is more than the debit side. So it is a surplus balance. Means Chandu also has to receive money from the firm. How much? 14,400. Last partner, Vijay. Here in the debit side, how much is there? 2,200. Credit side, how much is there? 10,000 plus 4,400. So which side is more? Credit side is more. So Vijay's account also shows a credit balance 14,400 minus 2,200. So how much the balance? 12,200. All three partners account shows a credit balance. Means credit side is more than the debit side. That means it is nothing but surplus balance. So their account shows a surplus balance. That means partner has to receive money from the firm. How the firm has to pay money to the partner? Through cash or bank. Now here which account is there? Cash account is there. To cash account. You can write final balance paid. So final balance is paid. So you have to settle the partner's capital account by paying money to the partner or by receiving money to the partner. Paying money means what? If the partner's capital account shows a credit balance. Receiving money when the partner's account shows a debit balance, that is deficit balance. Now in this problem, all three partners account shows a credit balance, credit side is more. So firm has to pay money to the partner. Anand will receive 24,400, Chandu will receive 14,400 and Vijay will receive 12,200. So now we have completed with the partner's capital account. Let us continue with the last account, cash account. Let us prepare the last account, cash account. Even cash account has a two side, debit side and credit side. Particulars and rupees column, amount column. Particulars and amount column. Particulars and amount column. Now when you are preparing cash account, first we have to record opening balance of cash. Now cash is an asset, so opening balance will go to debit side because that asset shows a debit balance. So how much is the cash amount? 21,000. So to balance brought down. To balance brought down 21,000. To balance brought down 21,000. 21,000. Next, after recording the opening balance, you just go through the realization account as well as partner's capital account. Where and all you return cash, just transfer to the cash account, to the opposite side. Now, first come to the realization account. Under debit side, whether you return cash anywhere, yes, debit side there is a cash. For what? Liabilities paid. How much? 31,750. Again, one more cash is paid, that is for 12,250. So cash paid will go to the credit side and whatever cash is received will go to the debit side. So you have paid cash for liabilities as well as for dissolution expenses. So here debit side you return. So now we are transferred to which side? Credit side. We are transferred to the credit side. From which account you are transferring? Realization. So you have to write the name of the account. So from which account you are transferring? Realization. By realization account. That is liabilities paid. Liabilities paid. How much? 31,750. 31,750. Next one again by realization account for dissolution expenses. Dissolution expenses. How much is the dissolution? 2,250. 2,250. Now go to the credit side of realization. Is there any cash? Yes. You have received cash for assets realized. How much? 69,000. Only one is there. Because it is there credit side, now you transfer to which side? Debit side. To realization account. To realization account. 69,000. Otherwise, what is the entry for assets realized? Cash account debited to realization account. Liabilities paid. What is the entry? Realization account debited to cash account. Realization account debited to cash account. So cash account is credited by which account? By realization account. Same way, dissolution expenses paid. What is the entry? Realization account debited to cash account. So cash account is credited by which account? By realization account. Here assets realized. What is the entry? Cash account debited to realization account. Cash account debited to realization account. Realization account is credited by cash account. Cash account debited to realization account, and realization account is credited by cash account. Under realization account you have to record under credit side, under the cash account you will go to the debit side. Assets realized 69,000. After that, go to the problem and see any partner's loan is given. In this problem there is Anand's loan. How much the Anand's loan is given? Anand's loan is 5,000. So partner's loan. Partner's loan you have to settle under which account? Cash account, by paying the amount to the partner. How much Anand has given the loan to the firm? He has given 5,000 loan. Now we have to pay. Pay means which side? Cash account, credit side. Anand's loan. Anand's loan 5,000. Anand's loan 5,000. Anand has given loan of 5,000. Now, after recording the partner's loan, then finally you have to record the balance of partner's capital account. Balance in the partner's capital account. Which side you have transferred? We have transferred to cash account. So which side you have written here? Debit side. And this cash amount you have transferred to the cash account. So from the debit side it will go to the credit side. Because firm has to pay money to the partner. Payment will go to credit side. By how much is paid? First partner, Anand, 24,400 by Anand's capital account. Anand's capital account, 24,400 by Chandu's capital account. Chandu's capital account, 14,400 by Vijay's capital account. Vijay's capital account, 12,200. 12,200. 12,200. So entry is what? Partner's capital account debited to cash account. So cash account is credited by which account? By partner's capital account. Cash account is credited by partner's capital account. Now we need to total the cash. Whatever cash you have and received, it should be equal to the whatever cash you are paid. So cash account should tally because you are closing your business. So we need to settle the cash account also. We have to close the cash account also. When you are closing, you should not get any balance. Now total 69,000 plus 21,000. Total is 90,000. Here 31,750 plus 2,250 plus 5,000 plus 24,400 plus 14,400 plus 12,200. How much is the total? 90,000. So both the sides are, total is how much? 90,000. So cash account tallies here 90,000. So how much total cash you had? 90,000. That full 90,000 you utilized to pay what? Liabilities, to pay dissolution expenses, to pay partner's loan, and to pay the amount of the partner. So total 90,000 is also utilized. So our problem is done. We have prepared all three account: realization account, partners capital account and cash account. At the end, cash account should tally.